Okay, how about now? Testing, testing. Should be better. Let me know if you can hear me now. What a real professional. Yeah, it seems like the mic is working. It seems like I had to. Still can't hear anything? That's weird. Should be okay now. Let me wait and see. Let me wait and see here. Testing. I know there's gonna be some lag, so I just need to um wait to see. Okay, okay, okay. It's working. There's like a time difference. There's a lag here, so all right. Well, yeah, that's stupid. So it apparently just came up on my default microphone, which is not on right now, since I was using this rainbow mic. Anyways, glad that that is taken care of. Professional streamer. Man, okay, so what was it talking about? Oh yeah. Welcome to the stream. prostockadvice.com/blog. Check out the new write-up is available. I did a write-up on CX actually. Yeah. CX looks like Nasdaq is down, but not much. 1.25%. All right, gonna be one of those days, huh? Or is it gonna be like yesterday, where everything is just down and then it claws its way back, all the way back? Interesting. Xiaopeng is up. Arcs are down, but yesterday was a okay. Looks like the financial sector bull is up, but yesterday was down. And whoa, nail is down 5%. Now that's interesting. Well, I mean, it can be interesting. I have had my eye on this one. No news. See what we can dig up here. So how are you guys doing? How are your trades? Markets are pretty crazy. I mean, you know, it doesn't really make sense, but then if you think about it, it makes sense. Does that make sense? Can you make sense out of this? I mean, Lemonade is getting smashed. Consistently getting smashed. It's interesting. I actually really like Lemonade as a customer, you could say, but as an investor, not so much, obviously. All of Lemonade. It's long time ago. This year, though, even Dow is down. But it's not down so much. You know? Pretty much the silver lining. Not really down so much. Actually, two of my recent swing trades were Ford and Coinbase. I don't know if you guys were following along on the Twitter. Follow me on Twitter. I don't know if you guys are following along on the Twitter to see all the live trades and whatnot, but yeah, we were doing some Ford, some Coinbase was doing really good. I still have my Coinbase ones. Those were doing pretty excellent actually. I cut most of my ARC leaps, and I still have my common stock though. I'm still gonna hold on to those. I didn't really ever have a very big position in it. Although I do like ARC the long term, but those leaps were not doing very well. So I'm planning on rolling it, but it's a very slow roll. I cut it. I will let it continue going down. Not even a thing. The markets are only down because you stopped the daily live stream. Yeah, that's a funny one. That's a funny one. Yeah, I doubt it, you know, because I think I stopped the daily live stream in when the markets were going down. Because the funny thing is, guys, and look, I'm not here to I'm not here to talk I'm not here to talk crap. I guess you could say. But but you guys disappear when the markets go down. Well, I can say you guys specifically that are on my live stream right at this moment because you're here. But my analytics tells me that people disappear. They run for the hills. They sprint for the hills. They literally are calling Ubers and taking them out to the hills because when the markets go down, people disappear, which is really interesting. You know, I was writing about that the other day, and I never realized how bad that was because I never streamed on YouTube or made videos or whatever, so I could get these analytics, like the legitimate analytics, because I've always had Twitter, but that doesn't really give you analytics. Not really, I mean, different. So yeah, you guys legit disappear. Again, not you guys, but in general, you guys. That's funny. And I wrote about that the other day. I think it was yesterday. I didn't even make a video on it, because I was like, a little bit just bummed out about it because markets go down. That's normal. This is kind of sucks. Nobody likes to lose money. I get it for sure, but dang, not all the stocks are down right now. Actually, a lot of things are up. And, but a lot of people are throwing in the towel, and it's been a difficult year. But not really, though. I mean, most people, if you're into like a lot of short-term risky options, then for sure you might be losing a lot of money. But if you followed my advice, and not even my advice, it's not my advice. I get my advice from people that are a lot more successful than I am. This is pretty much status quo when it comes to investing. Nothing. I don't do anything too crazy. I'm pretty conservative. Take a lot of long positions, a lot of ETFs, and for sure do some short terms. But I think you guys know that by now if you follow along. And yeah, I mean everything is pretty even. I mean it's not the best year, obviously, but it's not all that bad. I can say not the best. I mean considering how well we did last year, so kind of like that. And personally, I've seen a lot worse coin stuff over the past year. Small accounts' main objective when conditions are more difficult is simply to survive. Sometimes by not trading, I don't think it's reasonable to. Yeah, I know, but still, though, not about not trading, though. I think it's about not just throwing in the towel. I think a lot of people are, especially after this dip, I think they are actually might not want to come back. Just sell everything. Um, that's actually what I kind of mean. And I've seen some people like that. I talk to some people because I do the one-to-ones and uh, the called the webinar series. So yeah, for lack of better words, disappeared. And I think it's the opposite. I actually really think that when times are hard, that's when we're going to learn the most. And I think we should be more tuned in actually to this so we can see what we did wrong and what we can do better. I think this is the key here. And if you just kind of don't really, how to say, admit the situation is bad and then look at it and analyze your portfolio and see if you should switch things around or if it happens again, like da 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 da. I think it's actually a really healthy thing to do, and I don't think most people do that. And now that I see that the majority of people, yep, right, pulled most of your out of your stocks and put into crypto. I mean, that's kind of what I'm saying. Like, literally, there are people that are selling everything. And if you're at the point, I think, with stocks that you feel the need to just sell everything when it's down, that's kind of backwards. No offense to anybody that has sold at the bottom, but it's kind of supposed to be the other way around. So, I think that people might need to buckle up, button up, man up. I don't really know how to say, but that's a little bit opposite of, in my opinion, what it should be. These times like this, I take the opportunity to see if I did anything wrong, rebalance portfolios if it needs to be rebalanced. Of course, it's not always the time to rebalance and whatnot. Move some things around, cut some positions that are not that good anyways, no matter options or whatnot. But yeah, mostly cutting options. Yeah, for sure. That's the good thing to do. But the buying and the holding or swing trades, longer term positions, commons, it's a little bit like, come on. I mean, you get knocked down, you gotta get back up. You know what I mean? You cannot just keep laying down. I don't know. But yeah, the options would be a really good thing to cut when we're entering into the Titanic mode. When we've hit the iceberg and the sink is going to ship, and we don't know when the Carpathian is going to come rescue us. So, pretty much, you're going to have to cut some of these options sometimes because options, especially I mean, obviously, we're talking about calls, right? The calls that we have had when the markets were going up and then they start dipping, continues dipping. And I mean, yeah, obviously, those calls are not going to be the thing to be holding, but for sure. But hey, it is what it is. I am not. It doesn't actually really matter to me, but I just feel that it kind of is the opposite of what we should be doing, though. And I wish I could have a better platform, a bigger platform to talk to more people about that. But I don't. So just kind of write my blogs and mention this on Twitter every once in a while. But it reminds me of the one coach I had when I was in middle school, and really reminds me of. And I never forget. He told me that when you are, it was I was playing football. When you are the most tired, and you keep going and push and give your all of your effort, when you think you cannot go anymore, when you're exhausted, that's when you are improving the most. And so I really feel like I'm relating this, and I think I posted this on Twitter actually, but I'm really relating to this during these dips and whatnot. Because those are the times that we should be hitting this. But anyways, how are the markets doing? Not so bad. I mean, there's silver lining. Nasdaq is only down 1%. That's not so bad. FAS is down 1. I mean, the interesting thing is Nail is getting smashed. I kind of liking this. Just big smashed. And doesn't really, I mean, that's literally free falling. For a couple days now. I didn't even realize. This is cool. I've been writing about this for the past 2-3 days too. And oh, I'm watching it. Wow, ARC-G is only down 0.18%? Kidding me. Well, I mean, when we cut our positions is usually when they go up. So if you're ever wanting to cut positions again, just cut one of them. Don't cut all of them. If you have 10 stocks to sell, just try to trick the system. Just sell 2 or 3 stocks. Keep 7 or 8. We want them to think that we're cutting our losses and we're throwing in the towel. We want them to think that, but we're not actually. That's funny. The psychology of trading is very interesting. And I'm not a psychologist, but this one was pretty interesting for me to see what people think. Especially about the throwing in of the towel. And cutting positions is literally right when they're gonna go up, isn't it? It's funny how that happens. But yeah, I don't necessarily think that that's, even though it's up, what, 2 days in a row now? Excuse me, it's only down 0.2. So that's pretty good. And considering it's been basically free falling the last week or so. I mean, Lemonade is down 13%. Alibaba is up. I was writing about that one at the beginning of the week. But I also was writing about Roblox. Roblox and Lemonade just getting killed. Didn't take any positions on those. Usually when the markets are dipping, I try not to be so active in the short-term options because it's so unpredictable, especially this year. I mean, just looking at, Lemonade graph is like McDonald, Arch, and then down. And then we look at Lemonade. McDonald, Arch, and then down. I mean, this is just the growth and innovation stocks. Roblox, I'm sure, is the same. You know, here's the McDonald's Arch. It hasn't gone down yet, though. So maybe that's a good sign. Tesla isn't doing that bad. Interesting one is Nail for me, though. Starting to pick up. Yeah, this one is pretty interesting. I mean, I literally writing about this yesterday and today and thinking about buying it around the 50-day moving average. Also with the CMEX, which is a big Mexican corporation that doing in the house industry. Mostly they're making cement. I mean, you know, more or less right like that, right? But I think anything, what's it called? House related, construction, new homes, materials, lumber, anything like this is probably going to do pretty well for the rest of the year. I mean, the demand is just super high for new homes, and in a lot of the areas which what's up, Monica? I'm sure Monica will know all about this, and because she's in this industry, but it's pretty crazy. So I think probably this would be interesting to get into, but yeah, the blog is up though, guys, and yeah. So I did the analysis on CX today, and CMEX, together with its subsidiaries, produces, markets, distributes, and sells cement, ready-mix concrete, aggregates, clinker, and other construction materials worldwide. The company also offers various complementary construction products, including asphalt products, concrete blocks, roof tiles, architectural products, concrete pipes for storm and sanitary sewers applications, and other precast products such as rail products, concrete floors, box culverts, bridges, drainage basins, barriers, and parking curbs. In addition, it provides building solutions for housing projects, pavement projects, and green building consultancy services, seaman train maritime services. So cool. Basically everything. They do it all. They do it all in the construction, in the home building. And that's what I like to see. I like it. The Mexican corporation, it's been up. I mean, it's been up. It's been trading above the 50-day moving average on the day chart consistently since coronavirus. It's never really even dipped. I mean, it dipped a little bit, but then it immediately jumped back up consistently. So if we can find an opportunity for this one to pull back to the 50-day moving average and then jump into it for a swing trade options, I mean, it all sounds pretty good to me. We could sell covered calls. I mean, it's only $8. I mean, if it pulled back to the 50-day, it would probably be $7. So pretty interesting, but I mean, the thing about it is they did they had the earnings. It was a couple weeks ago, 2.5 weeks ago, 15 times higher than the previous earnings. CMEX's net income during the first 3 months of this year rose to 665 million in the quarter from 42 million in the same period last year. I mean, they beat it by far. So yeah, and that doesn't surprise me. And actually, the U.S. market sales rose 5%. And they're very optimistic. And this is the CEO said that they're very optimistic about proposed infrastructure spending in the U.S. That's the Biden jobs plan. So yeah, I mean, this one is looking pretty good to me, checking all the boxes for me. So yeah, but again, I think if it pulls back to the 50 moving average, I think it could be an interesting opportunity. And so happens that Webull is giving away the free CX right now. It's only an $8 stock, but I think it soon could be a lot more. I don't know how much longer they're going to be giving away this CX, but I think it's a good opportunity to get some right now. I mean, not necessarily right now, but if it's for free, for sure. I mean, buying it, I would prefer to buy it along the 50-day, especially if it's an option. Yeah, but if you're dollar cost averaging into this position, then it's not necessarily too concerning. But anyways, so that one looked pretty interesting to me. But as you can see, it's done very well since the coronavirus. Yeah, interesting. Energy's up. Financials are up a little bit. Dow is down. S&P is down 2. Sorry, the bull is down 2. Stock's still down 6.5. The nail is down a lot though. Soxel, I mean, it's $30 right now. Hoping to see that bounce off to 30. I think someone in the chat did it. Would you still buy and hold Soxel at the price point it is now? Oh yeah, sure. I would definitely buy it. $30. Why not? Buy one share if you don't want to risk so much. But yeah, I mean, I think it's seriously, I think it would be a pretty good buy. But I always say that though. It's a long-term play for me though. Dow is down, S&P is down. I mean, it's another one of the weird days. I mean, it's just there's just not very much up. Just depends on how much it's down, really. Semiconductors are getting hurt right now. Tech is not doing very well. It's not doing very bad. Even the cyclicals are not doing very well. And your treasury is doing well. Money. REIT is getting smashed. What about crypto? On. Facts. Facts. As far as just stocks, Calpung is up. Oh. Ooh, Lee is up. Calpung. Okay, so electric vehicles are doing well today, I guess, especially the Chinese ones. Banks up. Chevron's up. Chevron's at 108 now. Man. Remember when that was really low too, man. Oof. Oh. I mean, see, that's so you would think like, wow, great, right? You would think that, but then it's like, would zoom out though, even more. Yes, this is the month chart. Not bad. Man, though, it dipped to 70 though, even less than 70. Dipped to 50 too. But it was at 70 a few times this year, last year. I mean, that literally takes us back to 2010. Oh, I don't know, man. I know energy is doing good. Oil is doing fine, but it's barely above the 180 day on the month chart. It just got back past it, but for sure it's in an upward trend on this end part. You know, it's just still though for me. I don't know. Once it gets to 125, 130, I'd probably sell out right here. Maybe even 120, 122, something like that. Yeah, probably. Apple. Hmm. Consistently well. Except for what? .com. But see, that doesn't even really look so bad to me. I don't know. I think because I've seen the stocks lose like 40% in a couple weeks, or Bitcoin lose like 200% or something like in a few months. I don't know. Doesn't even look that bad. Especially if you just scroll over here. It's like, oh, that's the .com right there. Huh. Yep. That's 2008 crash. When you Ford doing all right. Ford and Coinbase are the ones that are, for us are doing pretty good. $10 Roku call. Cool. I missed the beginning. Did Zach buy anything? I didn't, but I'm thinking about it. I'm thinking about that CX one. CX was the one that I was interested in. Today I just did the report on it. Let's see here. Let's just go ahead and turn on over to the market watch. See if they're what they got for us today. U.S. inflation soars in April to 13-year high. CPI goes and reveals fresh stress on the economy. Yeah, not really a surprise. Why isn't that priced in? Why is only good news priced in? Why isn't the bad news priced in? Come on. Silly. Yeah, not surprised about that. These panic events could soon spell relief for stock market. Really? Beware heightened risks of fragility shocks in a market too dependent on the Fed. Bank of America warned. Okay. I mean, okay, that's cool. Yeah, the labor market is weak. Fed's Clarida expresses more concern about weak labor market than higher inflation. Yeah, that actually makes a lot of sense. I mean, the inflation was obviously going to be inflation. 10-year treasury rises. Oh, okay, so that's where we are right now. Gotcha. Going back there. Yeah, so why isn't why isn't the good news always gets priced in, but the bad news doesn't? I mean, did people really expect that there wasn't going to be any inflation? As a matter of fact, I remember Jerome Powell talking like, there will be inflation for this period will be higher than normal, but then it will all eventually average out. So yeah, I guess people don't really believe that, but yeah. Funny. What do I think of Roku? Ah, seems good. I like it. I haven't used it, but I would actually kind of like to. Could be. I mean, I think it's probably a little bit too hyped, in my opinion. But you know what? Probably it's a little bit too hyped, though. I mean, I don't see it as a life changing, game changing, life altering. Inflation climbs to highest in 13 years. Yeah. Well, see how that goes. Ford is actually going up right now. It's not so bad. I mean, Tesla is only down 0.8. Doesn't look so bad so far. I mean, this is with the this inflation news coming out. So yeah. It's coming up too. I mean, maybe it is priced in though. You know, maybe the bad news is priced in. You'd hope so. Financials are going up. I mean, it makes sense. It makes sense. Hung up, Baba up. He is killing it. Yeah, eventually, it was bound to have its day. Which was a long time coming, though. That is for sure. We were buying it back here, too. Did we cut it? Cut it as soon as it dipped down there. Which was a good decision. Was a good decision overall. It was unfortunate at the time, but kept dipping down, so was an overall good decision. Let's see. Caterpillar's doing well. Good. Consistently done really well. Nice. Yep, we were buying it down here. And here. Like, I remember those trades. That was a good one. It did well because Caterpillar has such a big oil position. For whatever reason. And let's see what else. Pershing is up 6%. Interesting. Oh, what's going on here? Nothing, I guess. Cool. Just up. Just decided to go up. I like it. Changes up a little. Yeah, but for sure, energy and its financials up today. Looks like tech is going to be going down. Although so far, not so bad. Except for limited. Space haven't ever done. Just like those. Growth and innovation ones are not doing well. And semiconductors are getting killed this week. Arcs. Not so bad. X is probably the best one now. Interesting. 10-year is up 3% today. It's not that much. Maybe it's overreaction here. The only way the inflation is low in the environment with low interest creating crazy amount of money printing is a major recession. Buying power of the high inflation, low inflation. I think stocks are screwed either way. Yeah, maybe. Tech and growth is not doing well and will probably be screwed in this scenario, but there's a lot are doing well, actually very well. Setting all time high. I mean, literally Dow is a few days removed from all time high. Yeah, 3, 2, 3. So yeah, I don't know. I definitely think that there will be a major pullback, but I don't necessarily see that happening. I mean, even with even that was like 3 days away. Even in also Nasdaq, it's done a lot worse than the Dow, but still, it's only 1, 2, 3, 4, 5, 6, 7, 8, 10 days away from all-time highs. And I don't mean just highs for the year, or highs for the past 10 years. I mean, this is literally all time. So, I don't. And if there's not a recession, then it should always be somewhat close to the all-time high, to be fair. But still though, I don't really see any major issue right now. I think there could be a lot of reaction. I mean, we're still not as bad as what we were here. Although, if it does go down more, it will go down to the 180 moving average. But on the bright side is, this is still in an upwards trend. So that's why I don't really. I don't really see so big issue. Just do a little bit of technical analysis. But assuming that this holds and doesn't go to the 180, but even if it does go to the 180 and bounce, then it's okay. We're still way past the coronavirus lows, and we're also the low from the September dip, which was a long time ago, but still not that long, less than a year. So we're still far above this. And even a 300, a pullback to 300, which would be lower than the 180, which the 180 is currently 307. Even if we pull back 300 on the NASDAQ, I mean, that would just put us even from the March dip, which March was months ago, but still, though, not that long ago. So overall, this is still in a clear uptrend. So, I don't know. And this goes back for what I was saying at the beginning. I think I just think a lot of people will abandon ship. But hey, when you hit an iceberg a couple times over, then you're pretty much running to the lifeboats. So I get it. And maybe this technical analysis, this parallel channel, maybe that is wishful thinking. I think the probability might be pretty high because it has been in this parallel channel for quite a while, and even this bottom at the March bottom lines up with the that was the Halloween bottom, and then the September crash is similar. Of course, coronavirus brought it lower, but it's been in this parallel channel since a little bit after the coronavirus. We'll see. Like Dow, it's more or less, there's not a very big difference in these charts. Just the only difference is Nasdaq swings more. It went from 164 bottom to 342 top. More than double. 182 to 351. So about the same. I mean, literally, there's not a very big difference. You want to be in Nasdaq, you want to be in tech, you want to be in cyclicals, Dow, financials. You know, there's not that big of a difference. I mean, if considering for the financial how much it got killed during the coronavirus. I mean, it went from 108 to 14. And that wasn't very long. 2, 3, 4 weeks. And 4 weeks, yeah. And then it just got out of. It's at 115 right now. The high before was 108. So I don't know about it. And we can look at the oil energy. Yeah. Energy's doing okay for this year. But the issue that I have with it is before that, pretty tough. I mean, this was coronavirus. So yeah, for sure it got killed. It was already on a downwards trend. You know, since, I don't know, say 2018. It's been going down the whole time. And this is energy. By the way, this is only a 2x, it's not a 3x. Yes. Crashed. And then it's just really bad for the longest time. Finally started showing some life November last year. I mean, since then it's going up a little bit. But it's only at 28. It's not even at 28 right now. Before the coronavirus is 185. And this is, I don't know. I mean, I guess I like that's kind of sums up why people want to get let the tech and innovation cool off a little bit and put money more into um those because they're still have a big ways to go. So it makes sense. But just looking at those charts doesn't really give me a lot of confidence at all. But it is what it is. The situation is just the situation is so we must react. And yes, so seems like the things that are doing well for me, it would be hard to go into the energy, the oil, and it's like I guess it's doing good now, but I don't know. I just don't have a good feeling about it. Soxel's down 9%. Cool, nice. And semiconductors getting killed. But the thing for me, it could be just a good old UDAO would probably be the safest bet. Could try S&P U Pro, maybe the S&P one. It literally looks the same. It just swings less than the T triple Q. Yeah, would be a safer bet to go with U Pro or UDAO. Would be a little bit even safer in this environment. But keep in mind, UDAO is just getting back to pre-COVID. Pre-COVID was 137, 140 now, so it's almost even. But see, I think that's the point though of why people are moving the money into these, because they supposedly have more room to grow. But I mean, if these companies are, if they were never making money before coronavirus, and they have a ways to go now, but they weren't making money before, so I wouldn't invest in those. But something like UDAO, ETF like this, then yeah, it would make sense. So I definitely like this as a safe play. Also, financial sector one. This one's doing great. Also not very far away from pre-COVID. 108 is 116 now. Cool. This is a 3x one, and yeah, I mean, this is Berkshire Hathaway, this is JP Morgan, Citigroup, Bank of America, Wells Fargo, Goldman Sachs type of ETF. So I don't see any problem with it. These banks are not going anywhere. They basically control the world. They are the Illuminati. So am I gonna get demonetized for that? Probably. Yeah, they're the Illuminati, so you know. I don't see any problem with this one. This one would be a very safe. It would be FAS. Also UDAO. Oh, a little more risky. You could try tech, Nasdaq, try to catch the bottom. Eventually, it will be a bottom. It's just a matter of time. We'll see how low it goes, but I expect it probably to go back closer to the 180 day. I don't see why it wouldn't. I do think it's going to get worse here. Because the inflation, it's just not good. It's not a good environment right now, but it is what it is. Yeah. Buzz. How is Buzz doing anyway? Ooh. There's our golden arch. Yeah. A lot are like this. Kind of large cap ETF. Not doing so bad, huh? The Chinese triple Q. Always fun. Electric vehicle. ETF. It's kind of flat. That's not bad. Flat right now is not bad. Oh, wait. I drive, also another one. The gambling ETFs. Yeah. Most things are down. Not a very interesting. Oil one is up 7%, which is cool. But still, even though it's up 7% now, I don't know. It was down like 7% yesterday, right? Even more, I think. So this one is a tricky one for me. I mean, it hasn't been doing that well. Gush is just oil, by the way, not energy in general. Tricky for me. I don't know about it. I would prefer to. I mean, you can make an argument that that would be a safer bet than the tech ones right now, but for me, I probably would just concentrate on FAS, financial sector, and the Dow. Anything like that. Also, the CX one that we were looking at today is interest to me. But I would like to buy closer to the moving average if possible. We'll see if it ever pulls back. Obviously not in a rush. Could easily set a limit order and just kind of forget about it here. But of course, it doesn't really matter. Well, S&P, QQQ have a huge overlap, especially on higher weighted companies, and I agree on it didn't all like it more. Too much optimism is priced in my opinion. Yeah, I know. I agree with that 100%. But you know, that's also what I thought before. And during the March dip, and we got out of the March dip, but kind of going back into dipping back in the dip right now. So I don't know. I'm still digesting all of this. You could say I'm not a trader or investor that's going to make rash decisions. Thinking about it, thinking about what I want to do. So yeah, sometimes doing nothing is okay, in my opinion. But I agree with you though. I don't know how to pronounce your name because it is in Cyrillic alphabet. Bad. Can't read it. But anyways, yeah, I agree with that. Dow Jones. It's tempting though to switch some money into cyclicals, financials. It's tempting, but yeah. It is too hyped though. But nothing is safe because we saw yesterday got smashed. Those financials and the energy got smashed yesterday, so nothing is really safe. But anyways, pretty much like that. I'm not really going to be doing anything. I don't really trade very much in times like this, as you guys know. I mostly sit back and watch what's going on. I don't disappear though. I still make some change. I switched around a couple of things in my portfolio. I cut my arc leaps and I'm waiting for it to go lower, to be frank. To be quite frank. Waiting for it to go lower to roll them out. So it's kind of a slow roll. Slow roll. I don't know if that's a thing. Is that a thing? Might be a thing. To manually roll it slower than usual. Funny. You guys like my North Korean flag, by the way? I don't know if you can see that. Oh, you can't even see it. Maybe on the videos, the camera ain't wider. Oh man, I've got some funny stories about that. How I got that one. I would like to share it, but stock investing channel is appropriate. You know, no one ever commented about that too. I was kind of curious. I thought somebody would see it, but I think I always usually on the bottom right usually put my logo. So is it ethical for venues, schools, Broadway, people not vaccinated, COVID-19? Dogecoin? It's funny because the Chinese name for Dogecoin is actually would translate to doggy coin. Use Dogecoin to buy a Model Y. Elon Musk wants to know if Tesla should accept the crypto. I don't know if he actually wants to know that or if he just thinks it's funny to post this on his Twitter. I really think that he doesn't care. All kind of a joke to him, which is funny. It's pretty funny to me. Wall Street is in the red as inflation jitters spook with investors spooked by inflation. Wall Street braced for the second day of declines on Wednesday, a day after the fear of rising inflation yanked Dow to its worst one-day decline since February and amplified new concerns about the rebound from COVID-19. Again, with a weekend cyber attack sharply driving up the cost of gas nationwide. Is that even real though, or is this just fake cyber attack? What a cyber attack on an oil pipeline? Like, what are you talking about? Shows how much I know. Those fears crystallized early Wednesday. The fears crystallized. They formed crystals. How about they form some diamonds? And we can sell the diamond. We can sell the fears. Buying the fears. Sell the rumor. Sell the fear? When there's fear in the market, we should buy. Yes. The jitters have surfaced as the U.S. economic recovery hammered by COVID-19 pandemic appears to be quickening. The recovery appears to be quickening, yeah. The Labor Department on Tuesday showed job earnings reached a record high in March. And a separate survey showed a record proportion of small business owners reported job postings that could not be filled last month. A system-wide disruption following a cyber attack on a key energy pipeline operator has sent gasoline prices higher, accelerating an already upward moving trend in energy prices as demand for travel and fuel resurges coming out of Just buy a Tesla. How about that? Who cares about gasoline? I certainly don't. I haven't filled up I don't even remember the last time I filled up with gasoline. I paid $3.50 per gallon today for premium. It was like $2 6 months ago. I don't even know, man. That's crazy. That means nothing to me. That's crazy. First of all, I am not familiar with prices in the US because I haven't been there in such a long time. And second of all, the gallon actually is in liters where I am. And third of all, I don't even know how much it is per liter because I haven't even filled up in just years. I mean, it must have been in not that long ago because I had a car. I had a car was 20. 2018, 2019, something like this. 2019 probably. But basically, something like that. But yes, I have heard. I've heard that 1 gallon is 4 liters. Okay, I didn't know that. But still, though, I don't really know. So it's 4 liters. So per liter, I don't even know how much it is. Legit, don't know. I would have to go pay attention next time I go by a gas station. There's no competition though because it's all owned by the state where I am. So there's no competition. So I don't no idea what people don't ever talk about that though. That's the funny thing. I don't even think people realize how much it costs per liter because I don't even see it posted anywhere. I'm sure it is, but I never in the decade I've lived in China, I've never heard of anybody talk about how much gas costs. Which is weird, yes, but it kind of just doesn't matter what it costs. Like you can't go to the Exxon or the Chevron or the Mobil, or BP or whatever. There's no choice. Like you just kind of go. The only one is Sinopec and owned by the state, and then you just go there. Price is what it is. And by the way, I have no idea what that price is. But I assume it's expensive. Maybe not. Maybe it's not. Probably could Google it faster than. Yeah, sounds about right. If I had a guess, it would have been 22. $4. So $4 per liter. So that seems. Oh, that's 1 gallon. Sorry, my bad. So it's $4 per gallon. Yep, 26 Y per gallon. Yeah, $4 exactly. Interesting. Mm-hmm. Makes sense. There we go. China fully independent on oil? US was I don't think so. I think they import. I even think they import from the US. some. I don't really know. Um, at least oil, but there's a lot of coal mining. But yeah, $4, huh? Is that expensive? Not really though. 350. Shanghai is the most expensive city in the world. By the way, in 2021 it is official. Like cost of living, something something. So yeah, that's where I'm living, and yes, I can confirm it is incredibly expensive in this city. So assuming that for regular gas in China is more expensive than here. Yeah, I don't even know if that's regular gas though. I guess you could say it is, but yeah, I would say most people put the premium in. I can be wrong though. It's not a very big difference. I mean, unless you have a huge car. I don't know. It just doesn't seem very expensive to me. $4 a gallon. $4 a gallon, considering this city is just very, 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 very expensive, and a lot of rich people, and super high cost of living. I mean, $4 a gallon is not very much. So people are not driving that far of a distance. I don't think they're really consuming so much gas, anyways. Um, it's not like it's not like if you're in Dallas or Houston or Denver and you have to drive like across the city to work every single day and commute really long distance. But yeah, I mean, could be stuck in traffic for a while if you're doing rush hour, but it's not so bad though. Hmm. That's interesting. What's on my watch list? Oh man, right now I would say the CX, which I just did the report on, Nail, of course, just Dow ETFs, the financial sector ETF, of course, Tesla, the ARKs. I'm still watching, although I'm not planning on entering a position anytime soon. Although we want to see how low they go. Think of the gas cost as doubling. It's expensive, yeah. I mean, if it went from $4 to $8, yeah, I would be like, hmm. Then again, I don't consume gas anyway, so I don't. See, that's the thing. Maybe people would notice, but I don't know why. I've never heard anybody talk about gas prices. Weird, weird because I think maybe it's people will not think about these things because it's something the government thinks about for you. I don't really think they have conversations about that. In my honest opinion, I think it's kind of like, oh, government decides it, oh, must be okay. It's a good price because the government decided it. I think it's more along the lines of that. So yeah, I just think people don't even talk. I think even if they did double it, people will be like, oh, okay, that's fine. Must be a good reason that they're doing that to us. Why this trader is shorting Apple stock? Buying gold. Let's find out. The Nasdaq managed to claw back most of its losses Tuesday. That's the funny part. Legit did, huh? Biggest component is Apple. Tech stocks have been lagging the Dow and S&P this year, but JC Parrots, founder of AllStarCharts.com, explained to Yahoo Finance Live this phenomenon stretches back to the end of the second quarter of 2020. The underperformance started on Labor Day last year at the end of the summer, and that's when they all peaked. Amazon has done nothing since then. It's not just tech stocks, it's really big growth stocks and even small cap growth stocks. Growth in general peaked at the end of last summer. Apple, Amazon, all on a relative basis. Sure about that. Peaked at the end of last summer? All-time high in January, bro. I mean, I kind of see what you're saying. In September, yeah, it was pretty high, and then it fell. It was kind of flat, but it clawed its way back up to a new all-time high. But relatively, I get your point. This area right here, it does kind of look flat. Certainly the 180-day moving average caught up. But that's not necessarily a bad thing, though. The last time it caught up, which coronavirus did, bounced significantly. So here too. 2018 dip. Yep. See what you mean? Okay. All right. Got it. 2021 is not 2020. Got an Einstein here. There's so much more evidence that 2021 is just not 2020 was, right? It's a completely different type of market, able to adjust and see the information coming accordingly. Some investors just like to sit on their hands and hope that last year's market was going to continue to be this year's market. You see it every day and they're paying the price for it. That is true. That is super true. Who is this guy? Hmm. I'm hearing that Kathy Wood considers Apple her cash equivalent. That's pretty scary if you ask me. I really like the short a lot. Notice those September highs where we got in September was 138. We tried to get back there in January and failed. Most recently, we tried to get back there last month and failed again. That's the level 138. If you're below 138, under no circumstances can you own Apple. I prefer to be short. And how low could it go? I could go real low. Why can't it go back toward 100? Says Perry. Why can't it go back towards 100? I suppose it can. Came out of this dip was the September dip 5. I mean, he's got some decent points. Not really making fun of this guy so much. Some decent points. But yeah, I mean, still though, there will be reasons why it pulls back. I mean, that's at 123 now. It was at 145 before the. Yeah, it was in January. It was 145. But yeah, it definitely it's having a hard time above 138. That is true. That is the truth. Hmm. Hmm. Oh, this is a good. It's a good take on it. I like it. I don't think that I would actually short Apple. What would you say the correlation of BTC, Ethereum, other crypto will be in response to rising inflation? More buyers or sellers? I would say more buyers, but who knows? That's hard to predict. But yeah, I would say more buyers, so that would make sense. People don't want to have cash. They want to buy houses. They want to buy Bitcoin. Obviously, it's 60,000. Well, not now, but it was, and almost 50, high 50s. I mean, yeah, I think that this probably go up. What would you buy in on the ARK funds? Which funds? Yeah, I would like all the ARK ones. I like ARK X, the base one. I like the genomics one. I like just the normal K. What would I buy in them? Hard to say because they're just really taking a beating though. Most of the charts will look about the same. This is just what growth looks like right now, not just ARK. So yeah, it just ran past the 180 day. I mean, to be honest with you, I could see getting if you can get sub 100, I probably would be interested in that. I don't know how low it's gonna go though, cannot say. But if can get something like that, it could be interesting. Really, I probably wouldn't do options on it. I'd probably just keep comments because you never know. You might have to cost average down on this position if you're interested in getting into it. Can be some extreme growth opportunity though, so I wouldn't necessarily shy away from that. But yeah, for sure that would be a little bit of a risk. Well, it looks like Nasdaq is down 2%. Financials are not really doing that. Nothing really is. Yeah, low it goes. Yeah, but I wouldn't really be in a rush though on any of the. I wouldn't be in a rush in any of the ARC ones or the growth. I don't think that there is such a big rush to get into this, because the markets are pretty choppy right now and they're really getting hammered. I think you're looking to do something, wait for a day that Dow is down or financials or something like this and get into it. But anyways, not much going on. It's definitely gonna be a red day. Everything is, Dow is down. No. Uh, yep. Also, financials not up very much. But anyways, it is the Titanic mode, so what expect? It is what it is. But nevertheless, guys, I appreciate you tuning in for all of you that did, and I am gonna wrap it up though. But yeah, you know where to find me on Twitter. Like and subscribe to this video if you can. I'll post it up on YouTube for sure if you want to go back. And yeah, we are doing the new webinar series. It will be starting in 2 weeks, 2.5 weeks, or something like this. It is on the website at prostockedvice.com/seminars. So if you want to join, send me an email or a DM